Arigato Saito-san. Now, we're coming to the last session before lunch, so I hope you have your appetite ready for a great special set of speakers. We will be talking about you, me, and your identity, creating trust in personal finance. We have three innovators from wealth management, Regtech, and investment discussing identity protection in personal finance. In conversation with Shuli from Bloomberg, please welcome onto stage founder of Blockpass IDN, Adam Vaziri, CEO of Wealth Management at fintech, Zheng Yudong, and CEO of 8 Securities and one of my favorite people in Hong Kong's fintech ecosystem, Mikaal Abdulla.
Good afternoon, everyone. I would just like to remind the audience that you may ask questions anytime through your app, and I should be able to see from the prompter your questions. So without further ado, like 2/3 of consumers around the world, they don't feel that comfortable with storing their personal information online. What kind of information do you guys think that is most vulnerable, most at risk of identity theft? Adam, do you want to take this question first?
I mean, I think the reality is that...
I think there's a... Can somebody...
Hello? Yeah, maybe I'll start until they fix it. I guess I would start by almost sort of challenging the question to begin with. While it may be true 58% of people have a concern, I think there at the same time is a big generational difference. So in our business, we offer mobile investing services direct to consumers, and 75% of our customers are in their 20s and 30s, so they're very, very young. And we just honestly don't see a lot of concern around privacy. And we have a first sort of hand view of it because we have social components in our app. So people are essentially openly sharing information, they're sharing their portfolios, they're sharing the trades that they're making. And one interesting point I'd make is when we launched the service, we literally had to ask all of our customers if they were okay with sharing this information. And 98% of them opted to do so. The few that chose not to were in their 40s or 50s. So from our perspective, I just sort of challenge the idea altogether that it is a big concern. But what I would say is I think if people have a concern, it's more likely to be with traditional offline businesses. And I think there's more inherent trust with online businesses and technology companies protecting it better than a traditional business may.
That's interesting.
I think I'd like to add to that, which is basically anything that's on the internet is not going to be secure. That's full stop. Any business that thinks that somehow they're going to create a vault and they're going to protect people's data are somewhat disillusioned. You know, they're deluded by that. Because if you look at the facts are shows you a trend where data is being lost continuously. Even Cathay Pacific, which is here represented, lost millions of consumer records. Let's just be honest about this. And so the only real counter trend to the loss of personal data is to give the users control over their own data and to minimize the transfer of data itself. What we are seeing, of course, I'm coming from a crypto angle, so more like cryptocurrency decentralization, that this will be the trend of the future. As companies continue to lose personal data and are unable to store data securely, that the trend will be that the users will store their own data and that they will permission others to see certain things about them, maybe momentarily, or maybe they won't even show any data at all. They will show a proof about something that relates to them, maybe a demographic proof. I am of this ethnic group, or I am over 18 without disclosing who I am personally. So that's the trend that we want to kind of bring in place, the counter trend to basically mass loss of data, identity fraud, which is systemic for one simple reason. Anything on the internet is not secure.
This is very interesting, and I'll get back to you later. But I first want to ask Yudong, you operate in China. What's the trend that you see? Do you see that the Chinese millennials don't care about their personal information lost online as much?
There's a senior IT executive in China once said something politically very incorrect. Is the Chinese seems don't quite care about the privacy in exchange for some convenience. Which I think that holds certain truths, but things are also changing, that people start to think that the data privacy is an important thing in China. So you are seeing both the consumer attitude and the regulation starting to getting tougher and tougher. From our business, that one of our businesses is to helping financial institutions to generate millions of small credit. And one of the big business is on the hotel bill, air ticket installment. So we take care of this information very carefully because there was kind of a fraud, not happening on us, but on some other people's data, that when this data leak out, the consumer, the victim, will immediately get a call from someone and pretend to be an airline executive and say, hey, sorry, your airline you booked yesterday has been canceled. And I'll send you a website, and you can go in to start to change your booking, etc. And along the way, they ask for very confidential information. And many people fall into that. So this kind of information is important. And as other speakers said, there's no 100% secure information on internet. It matters that who do you trust to share this information to, and how that person you trusted is going to safeguard your information.
So, Mikaal, can I just play devil's advocate? You think younger consumers are less sensitive about their personal information, perhaps because they are just not wealthy enough? That data is not worth much. What's your view on that? As they get wealthier, say their trades are doing better and better, like would they still be as open as before?
Well, I think wealth is, I think it's relative. I think if you're just getting started investing and you make a $1,000 deposit, that's a lot of money to you at that time in your life. So I don't think it's about their level of wealth or that as they sort of progress, we could assume that they're going to be more concerned about it. And I don't want to give the impression that people don't care. I just think there's an inherent trust with perhaps a technology company that may not exist elsewhere. So there may sort of be disparity between the type of institution they're dealing with, and it's not just a blanket statement. But I can say from our perspective, broadly speaking, customers are just, they're pretty open. I think if you look at their behaviors on how people use social, how people interact, it's natural that they're going to want to share and they're comfortable sharing.
And Adam, I have heard that blockchain is going to be the way to store the person's information online safely. But the blockchain technology, it feels very esoteric and it's difficult to access for the general public. What do you guys do to help educate us? Can you give me some concrete examples?
Yeah, sure. I mean, first of all, there's a misunderstanding. You should never put any personal information on a blockchain. That is, first of all, irresponsible because it's on a permanent ledger. And if you use it in that way, then everyone can track you and everything that you're doing. So it's nonsense, people talking about personal information on a blockchain. What is interesting, and this is what we developed, is what we call a zero knowledge proof. Sorry for the esoteric language, but basically, rather than me telling you that I'm 38 years old, I just tell you that I'm over 18 because your service needs to prove that I'm over 18. So a general statement that you can have on a permanent ledger, such as a blockchain, where the person that provides the proof that I am over 18 provides the proof onto the blockchain itself in a way that no one can track that proof afterwards. So for example, people will come to us at Blockpass and say, I'm over 18. We then put a proof on the blockchain that they are over 18, which is basically tagging their address on the blockchain. And then we cannot track what they do with that proof afterwards, because basically they can just present that proof and show ownership, physical ownership of that key on the blockchain without us even knowing about it. So it's a perfectly anonymous way of proving something in a general way about someone without revealing personal data about the person. It's like the perfect distributed database for that particular use case. But taking personal data and put it on the blockchain is ridiculous. And anyone that tries to do that is either living in cloud cuckoo land or is totally irresponsible. So for us, blockchain serves that purpose of being a general permanent ledger that you can store general statements about persons that can be reused by that person without anyone tracking that reuse.
Mikaal, do you feel like your younger millennium consumers are quite interested in blockchain technology?
I think I'll make a general statement about blockchain and technology in general. I don't think customers, and we're dealing with directly with consumers, care about what technology we're using. Customers want three things in financial services. They want simplicity, they want it to be fast, and they want it to be affordable. Whether they're interacting with our service or any other service, I don't think they particularly care about the technology behind it. They just want those three things to be served. And I would just add to what you said, I think perhaps the motivation there is less about people's concern around privacy than convenience, right? Because what you say just makes things faster, simpler, more convenient, and that's what's motivating people, not necessarily a major concern about their data privacy.
And Yudong, what's your feel about consumers in China? Where do you see like blockchain technology that is applicable?
Personally, I think blockchain really applies to complicated multi-party transactions. Unfortunately, personal financial transaction is not one of those. Again, take us as example, right? When we're generating a lot of credit, and these credit go to a financial institutions, and the borrower, when they defaulted, we need to inform that respective financial institutions, and they behind them has investors. So that construct a very complicated multi-party deal, which blockchain in this case makes sense to make it the entire proof integrated and non-disputable. However, in personal financial spaces, from technology perspective, I do see a few issues, right, using this. Number one is the volume and efficiency problem, right? There's a lot more financial transactions personally than institution-wise, so how do we tackle the volume issue? Number two, there are regulatory requirements in terms of personal financial transactions that requires non-anonymous, requires transparent, requires traceable, and accountability. That is probably a little bit different from what blockchain wants to advocate. So from regulatory standpoint, there's an issue. Number three, you do need to give a trusted party your personal information. For example, if you want to get a sound personal wealth advice, you need to share to that person what is your current holding are, what is your goal, what is your risk appetite. You can't make general statement and get a sound advice. So these are some of the technical difficulties I see. I mean, blockchain is a great technology that hypothetically it solves the privacy and confidential issue, but I just think when applying to personal financial services, there's still a lot of challenges to tackle.
That's interesting. I'm going to ask you a very blunt question. What's your end game? So we see like Goldman Sachs and Morgan Stanley have been very acquisitive of fintech companies, right? Like even the big elephants in the room, they know technology is very important, so they have been acquisitive. What do you plan to do? Like with your company, do you want your goal is strategic exits or like IPOs? What's your end game? Or just stay private and make your own positive operating cash flow?
So I think from my perspective is, so if we talk about IPO, I think in Hong Kong specifically, listing requirements are still too high for startups. And the fintech startups in Hong Kong are too immature to list. We're just not at that stage yet.
In what sense? Like you
So you have to have 3 years of profitability, which makes sort of investing in growth and investing in your business early sort of difficult to do. So I don't think listing is going to be conducive to most fintech startups in Hong Kong. I also think major banks, asset managers, insurance companies have spent the last sort of 2 years doing their build versus buy analysis. I think that's been going on. And I think most of them are probably coming to the conclusion now that building it is either going to be more expensive, take longer, or just simply be impossible. So I do expect in Hong Kong in the next 24 months, we're going to see a big increase in M&A and or strategic investment. And I think any entrepreneur that has the ability to, retain equity and control in their business while raising capital in order to grow bigger, that's probably the optimal solution. And if in the future that means you can IPO or it's an M&A, at some point people invest in a startup because they expect an exit. So those are the two natural ones.
Okay, and then in terms of strategic investments, like how much are you willing to give away? Like a 20%, 30%? Like, are you willing to do as much as that?
I think it all depends on what the strategic investor adds. If they can create value for your business, meaning they help you enter a new market, they're giving you distribution in China beyond just money, I think it's ultimately about how much value they can help you create. Then your ownership is a little bit less meaningful. So I think it's less about percentages and how much you think they can help you grow your business.
Yeah, I mean, for Blockpass, we basically built Blockpass for the cryptocurrency industry. Cryptocurrency industry is an unregulated industry that's gradually becoming regulated. And FATF is going to make the industry even more regulated. And I've been in the space for over 6 years, working in law as a lawyer. And that's why we built it. So we want the industry to own it. We want the industry to get behind it. We want the demographic to be from that crypto industry. For there to be 1 million users on Blockpass that own their identity, that have a verified profile, and never need to do KYC ever again. That at least they can enjoy an open financial system, which you're unable to do in traditional finance. And for that to happen, we need the industry to buy into it. And so that's what we're doing in Blockpass. We're inviting the industry to buy into the actual company itself. That's our strategic play. Of course, we want to, work in other areas of regulated industry, finance, gaming, etc. But we won't go directly into that industry. We go in through strategic partners. For example, here in Hong Kong, we work with To Go Trade. They're a massive systems integrator for brokerage companies. I don't know anything about securities brokerage, but they do know a lot. So they're the right strategic partner to bring us that product into the market and bring, as a general point of view, decentralization of data, control of the user over their own identity and data. These are things that the world needs, not only the cryptocurrency industry. So we feel very strongly about that vision and work with strategic partners to achieve that.
And Yudong, your company is already publicly listed, right?
Yes.
And then, in general, in China, what are the startups that you see that your peers? What do they want to do?
Yeah, we got listed in Nasdaq last year, and generally from a China experience, again, it's very different from the rest of the world. Basically, what I see in China is the big financial institutions tend to grow their technology capability organically. If you look at Ping An, they spin off their technology department, become an independent technology company, and start to export technology to other institutions. You look at ICBC and Merchant Bank, they have a huge technology team within themselves. So for us, for startups in China, selling to financial institutions is simply not an option. So we decided to go public last year. Whereas when I see other parts of the world, especially my counterparts in Los Angeles and LA, they have seems much better life. I mean, the US and European giants are very active in acquiring small startups, becomes part of their ecosystem and helping those big organizations to do one very specific task. So a lot of my friends in LA, they happily joined big financial institutions after a few years and had a good life. So very different scenarios between China and the US, I would say.
That's very interesting. Well, thank you so much for coming, and this concludes our session. Thank you so much.
Thank you.